Thank you all for joining us today at Carnegie-Stout Public Library. My name is Sarah. I'm one of the librarians here, and I'm very pleased to offer you one of our first hybrid in-person programs at the library since the pandemic started. And we've got Tony Viertel. He is an AVP Community Outreach and Education Specialist at Dupaco Community Credit Union, and he's here to answer your questions about finances and investing and all that great stuff. So thank you so much, Tony.
Awesome. Thank you. Appreciate it. So, yeah, I guess today I just want to keep an open dialogue with everybody here in person. If you guys do have any questions as we go along, I can certainly answer those for you. Little background on myself. My name is Tony Viertel. I am with Dupaco. Been with Dupaco for over 3 years now. I've been in the financial industry for about 11 years. Was at another credit union before this. So Dupaco, being a credit union, we have a different business model than maybe a lot of other businesses that are out there. Dupaco is a not-for-profit organization, so we are out for the best interest of our members. The members at Dupaco are owners of the credit union. So if you are a member of Dupaco, you have ownership in the credit union, which is a little different business model than most other places that you see out there. So at Dupaco, we really take that to heart. The people helping people model is very, very important to us. And at the end of the day, we want to see all of our members succeed financially. It's can be such a big stress relief when you have your finances figured out or in a place where you start to feel comfortable with them. We find that very important. So we help you set things like a budget, set goals for your life when it involves money, what's important to you. We help you with that, help you with your credit significantly so you can get those better interest rates, maybe home ownership, something that you want to look to in the future. We can get steps in place for that to happen. We offer our money makeovers and mortgage makeovers. So, and we offer those makeovers to members and non-members. So it's completely fine if you do not want to be a Dupaco member and you still are looking for some financial help. Once again, being part of the Dubuque community and the larger greater tri-state community, we're more than willing to help you if you're a member or non-member of Dupaco. So we did start here in Dubuque. We were part of the Dubuque Packing Company here. And then it turned into Farmland Food. So it's had some names over the years, but that's where Dupaco originated. So if you look at the name Dupaco, it's the Dubuque Packing Company. So that is kind of our roots and where we're from. So kind of get started on some questions here. I'm just going to go through a list. It looks like we've had some questions that have been submitted over the course of the last couple of weeks, I would say. So kind of start with one here that is still unfortunately prevalent today. So we'll get a couple, I kind of have them sectioned out in different categories. So we're going to start with kind of some basic financial questions, and then we'll kind of move into credit. We have some investment questions, and then also just a few that are kind of some general questions on finances that didn't really fit into a specific circle. So starting off at the top there, the first question we had was, how has COVID-19 changed my basic financial advice? And I would say it hasn't necessarily changed how we would tell you to handle your finances. It's more along the lines of, I think people with this major life event now realize that they have to have a savings and they have to be prepared for an event that can happen at any point in time. So setting yourself up that savings, we really try to preach having at least $1,000 set aside in a savings account. That can be very, very difficult to do, especially if you are living paycheck to paycheck. But we have some really neat ways to be able to help people to do that. So I would say that I wouldn't say necessarily that anything has changed since COVID has started, but more along the lines of people's eyes have been open to what they need to do to live their lives. And, we went through unemployment rates that were out of this world. So what did people do at that point? Thankfully, we were able to rely on the government, but until that came into place, how were you taking care of yourself? So just to be prepared for the future is very important. And I think that once again starts with budgeting. Now, you'll probably hear me say that quite a bit. That's a theme through a lot of this is budgeting. So next question we have here, is it more important to save money or use it to pay off debt? So the example is given, would you have used your stimulus checks and put them into savings or use them to pay off credit cards? So that's a great question. Really good question. I've had that come up quite a bit. You got maybe some people still have some of the money sitting around. I would make sure to have a savings that's comfortable for yourself, first of all. So the general line of thought is if you can get to the point to have 6 months of income set aside between your savings accounts, that's typically what they try to say. So that would be your take-home income. So if you take home $2,000 a month, 12 grand, that's a huge amount of money to have set aside. That'd be 6 months worth of income. But if you lose your job, something comes up, at least then you're able to figure out where you're at for 6 months before you really need to start worrying. So when it comes to something like that stimulus money, what should you be doing with it? I think it's kind of a mixture, it depends on where you're at. If you don't have any savings at all, I would certainly try to get that $1,000 set aside in your savings account. And then from there, I would say most likely try to pay off your highest credit card debts. So that's something too. I have some information up here and I can certainly send these to you as well as PDFs, but you know, that's a whole separate discussion too into debt repayment strategies. One great debt repayment strategy is getting those high interest rates paid off first. So maybe you have a small couple credit cards out there, Kohl's card, Victoria's Secret's one we see a lot, American Eagle, whatever those cards are, and you could use some of that stimulus money and pay that card off in full. So highly recommend doing that as well. Before I get into any more questions, do you guys have anything that you wanted to, any questions on this subject before I get going? So next question that we have here, are saving accounts worthwhile, worthwhile while there's terrible interest rates, or does one need to invest in something else to make money on their savings? So I'll read that again here quick. So should you be having something like a savings account, or should you be investing your money elsewhere? Some of these questions are fantastic. They're very detailed questions. I absolutely love them. So it comes back to your budget and your savings. So do you have that money set aside for yourself if an event comes up in life? At Dupaco, we preach systematic savings. Has anyone, do you guys know what, have you ever heard of that before, or any idea what a systematic savings would be?
Like automatic?
Yes. Yeah, so systematically save for things or automatically save for things. So if you imagine your account, you have your checking account, that's where a lot of people hold their money. Then we like to open up additional savings accounts for you. So to be a member at Dupaco or any credit union, your membership is based off of savings accounts. So you have to have a $25 sharehold in your savings. Then you can open up what we call you name it accounts, and other financials offer this as well. You can open up as many savings accounts as you want to. So that's where budgeting and savings kind of comes into play. So for instance, myself, I have a holiday club, a vacation account, taxes and insurance. I have one for my pets. I have one for my vehicles. What'd you say?
Why did you open up that many savings accounts instead of checking accounts, considering the interest rates are about the same?
Good question. So you're saying, yeah, why offer all those, why put those in savings accounts? Because then so it does two things. So with my checking account, I want to run down as low as possible every month, because then I know that I'm living within my budget, because I don't like to keep extra money personally in my savings account, because then I see that as money I could potentially spend.
Checking account.
In a checking account, thank you. So when you have them in savings accounts, that's not month-to-month spending per se. So like the pet account, for example, or my vacation account, I'm not using that every 2 weeks or once a month. Those are typically a once a year event or a couple times a year. So, and then I visually know I have that much set aside for vacation when I have it in that account. So that's where we go into having goals as well. So you have a goal in mind of, let's say $2,000, you want to go on a vacation, you want a big vacation, so you're gonna spend $2 grand, huge. So what we do is, let's say it's next year, you divide that out per paycheck, how much you need to save, and you have 20, let's say you get paid every 2 weeks. So then you're gonna have 26 pay periods to pay for that vacation ahead of time. So then you go and get your calculator out, and you say, gosh, okay, so I said I want $2,000 saved up by next year. So I put 2,000 in and divide that by 26. So every paycheck that I have coming in, I'm gonna set aside $77 into an account. Yes.
So isn't it 24 because there's 2 weeks that you're gonna be gone? And I
So,
was in my own business, so I don't know how that works.
okay.
But
Yeah, so the question was, really, isn't it only 24 weeks because your vacation? So I would say, let's say you're going, what is September 12th today? So if you're going September 12th of next year, that's when you're starting your vacation. You would technically have 26 weeks until that vacation starts. So I would just figure out how many pay periods you have until that vacation starts. I just threw that out as an example because that's perfectly 52 weeks, 26 pay periods. But you can kind of figure out how many per, does that make?
yeah.
Okay,
Okay.
yes,
You're such an eager questioners.
I like it.
Just really specifically, it wasn't your words, but the question talked about terrible interest rates. If somebody asked me like, what's a great interest rate and what's a terrible interest rate, like I guess I know 10% is good in investing, but I have no idea what a terrible interest rate would be. I know that you didn't ask the question, but could you just give me a sense of what that might be?
Yes, thank you. And I did go off into a tangent a little bit there about savings accounts and how to manage those. And I think that kind of then ties in fully. So that money that you have sitting in an account like Dupaco is not money that you're hoping to earn interest on. That's just not long term. That's not why you have that money. That's your money, liquid money is what they call that. The money that you're going to be using without the next 6 months to a year. So what, then they're talking about investing. Well, that's a whole different ballgame. So once you feel comfortable saving and you have that money set aside, then you can look into the future of investing. What I recommend is if your employer offers any sort of match into a retirement account, make sure you're minimum doing that match. So if you're, what that means is if you put 5% of your paycheck away, some employers would put 50% of that in as well. So they put 2.5% of your paycheck into a retirement account. That's free money. 2.5% more an hour, you just gave yourself a raise because you were willing to take that. So that's the money I would invest, something like that. It's above and beyond what you need to live on within the year. And as far as interest rates, our accounts are so minimal right now. I think it's 0.05 is the savings account rate right now. So it's extremely low. Whereas, an investment account, especially if you're in a little bit more of an aggressive, you could be earning 15-20% this year because the stock market's going insane. So that's a great place to be. I would start if your employer offers anything, and then, certainly at some point, once you feel comfortable with your budget, then yes, I would definitely get into the investing world. So, awesome. Great questions. So one more here, any advice for how best to budget monthly income? What percentage should go to housing, food, etc.? I get that question a lot. Well, what percentages should I use for things? For me personally, and this could be the wrong answer, this could be an answer that you hear differently from different people. I think you have to figure out what's important to you in life before you can really budget for it. Some people really enjoy going out to eat. You might be spending a larger chunk of your money every month on going out to eat, but you've budgeted for it. That's the key word. So, or you really enjoy, you want to have a nice house. You want somewhere really comfortable to go home to at the end of the day. So maybe you're spending more money on your housing than on anything else. So what the key is, and I brought some with me here, is to actually sit down and look through it all, figure out what your income is every month. Start with your net income and then kind of work through it. We've already spoken to a little bit about small businesses. You may be a business owner. Your income may be variable month to month. That can be a little bit more difficult to budget, especially if you live off of tips, if you're something like a bartender or server or things like that. That's when budgeting can definitely get more difficult. And I always say err on the side of caution with budgeting that. So if you have an average of kind of where your income has been in the last 6 to 12 months, I would always err on the lower end of that. And then you potentially have some money left over to put into savings. So I do have those budget worksheets up here. If anyone does want one, feel free to take one. And I can always work through that with you individually in more detail as well. So any other questions kind of on that budgeting, savings? Yes, just one moment here. We'll get the mic over to you.
So when COVID started taking hold and then the political situation got real ugly, I got on the phone, called my 3 best friends. One's my grandson, he's 33, he's a brainiac, and he's best of the best of whatever he gets involved in. other one is an 80-year-old lifetime investor, owns multiple properties. And the other one is a born and raised Arkansas farm boy. And he's one of those fragilists. He has a garage with separate. So all three of them said, take your money and turn it into cash. So I was hesitant because I didn't, know what to do. And what do you do once you get it? You bury it in the backyard, what do you do? So anyways, I did that. And I brought it all home in $100 bills, and then they said, no, you need it in small bills. So I went back a few times and turned it over into 20s, feeling like I didn't have a clue what to do with my life in an emergency. So what are your thoughts about that situation or any ugly situation that we're confronted with? I know when I lived in Florida, when the hurricanes came, a lot of people couldn't get a hold of their cash, and the credit cards and the ATMs were empty. The gas stations were getting empty. There was a hurricane coming up. So
Yeah, that's a great question. So, and I'll kind of paraphrase the question again, just to make sure I'm understanding what you're looking for. So basically, in a situation where there's a natural disaster or maybe a national crisis going on, international crisis in this case, what do you do with your banking needs? What do you do with your money that you have on hand? Do you look at it as more of a, in this, I don't think would be negative in this sense, because I think we were all there, but is it a panic situation? Are you pulling all of that money out? Is the banking system going to be there? You starting to formulate questions in your head. Is there going to be money for me to get out at an ATM? Boy, that's a case by case scenario. You've had three very smart individuals in your life tell you the same thing to get the money out. That would make me a little nervous, because if you have that cash, if anything happens to that money, and if that's your livelihood, if your house starts on fire, even if you have it in front, whatever the case may be, maybe you get hijacked on your way home, somebody, you don't know. That's the scary part about carrying cash with you in my thought process. At least if it's in the bank, Dupaco itself, every financial that's of any size is federally insured. We're insured up to $250,000 per individual. And then, so that's through NCUA, and then banking systems have FDIC, and they're also insured up to $250,000. So that's the government saying, we're gonna back that money if anything ever happens, you're safe. So that's my first thing to tell you, is that money wouldn't have gone anywhere if there was a crisis that did happen. Now granted, would you be able to get that money out? And ATMs were empty, things like that. Hopefully you can still use your debit card. Hopefully you're still able to get the things you need. I mean, if the whole world is in a crisis, and is cash even going to be worth anything to you at the end of the day anyways? So, what's $100 bill? What's a 20? It's a piece of paper. At the end of the day, that's all it is. So, there's other ways to invest your money too. I'm not up here giving financial advice on that. I just want, I believe in the American dollar, but also, there's gold, silver, there's other things that people invest in. So to answer your question, I personally would not pull all of my money out of a financial institution at risk of what could happen to that money. Because at the end of the day, it is just a piece of paper if you have it with you. And that to me would be a little scary. But I think you need to do what's best for you and what you're most comfortable with and what your advisors told you. I would say always too, to work with a financial advisor. You may have some very smart people in your life, and that's amazing, but maybe they don't have, financial advising is a very small pathway, and people that work in that industry are extremely smart with questions like that. So it doesn't hurt to talk to a financial advisor and have one on call if you need to. Just like a lawyer, if you ever need to advise a lawyer for something, you should have one on call that you can have answer a question for you. So does that kind of answer? Okay. Yes.
I guess I would ask, where did you pull that money out of? Was that in the market, or was that in like the savings account or something?
And I see where you're going with that. I think taking, potentially, if it's not in a retirement fund, if you just have money to play around in the market, maybe that was something too that they were thinking you had money in the market, because a lot of people were very nervous in March, April of 2020 with the market, and it did crack. I mean, it plunged for a few months. So that was another piece of it too, that's pretty risky having any money in there long term. You gotta ride the ups and downs with it, So, awesome. Okay, so a couple questions here. Let me see what my next section is. So we'll do a few on credit here. Anything else on budget and savings before we move forward? Yes.
Does Dupaco offer any kind of short-term treasury bond?
As just Dupaco itself, we do not. That would have to be through our financial advisors, the stocks and bonds side of things. We do have financial advisors at Dupaco. They're called the Dupaco Financial Services. So they deal more with the investing in bonds side of things. US savings bonds, so like, I don't know if any of you had those paper bonds, the EE bonds, where it was probably the most common one that was backed by the government. Those are all online now, so no financial. It's been that way for probably about 10 years. So you can't walk into any financial and get a savings bond anymore. That's all through the USTreasury.org website. So moving on to credit here, the first question that we have, let me see if maybe we do these in an order. So let's start with just kind of a general question. Credit scores are important, but what are they, and how can I change mine? So what is a credit score, and how can I change it? So unfortunately, and maybe some people that have some life history behind them, credit scores really have become a huge piece, would you say, in the last 15, 20 years maybe? I mean, did you guys hear talk of credit score with like you have in the last 5 or 10 years? Isn't it crazy? It's becoming more and more and more important, I feel like, in every piece of life. So I think, to answer what it is, your credit score is basically, I have a sheet up here. It's inside those pamphlets. I can grab a few more of them up, but there's a pie chart of what makes up your credit score. I think it's in that pamphlet. Yep. If you look at it, so what the two biggest sections is that pie chart there on the right hand side. Yeah, there. Yep, that's what makes up your credit score. Yep. So when you're looking at what makes up your credit score, 35% of it, and I may have these numbers off just a few, but I'm pretty sure 35% of it is payment history. So payment history, that one's pretty self-explanatory. If you have a debt out there, you're going to pay it on time every single month until it's paid off. Or you have a credit card and you're paying that every single month on time. That's payment history. Biggest section of the credit. The most recent 12 months of payment history is what affects you the most. It starts to die down after that. So if it's something that you maybe missed a payment on 2 years ago, that's going to have less effect, obviously, than if it was 3 months ago. So payment history is self-explanatory. Pay your bills on time if you can. Things come up. Something I always mention with that, if you do have a creditor and you are, like COVID happened, call that person. Say, hey, can you help me out with this right now? I had a life event happen. I lost my job. COVID happened. What can you do for me in the short term until I get working again? They may be willing to delay a few months worth of payments for you. They're just going to be really happy that they called, because they don't want you to be delinquent either. That looks bad on their company as well. So highest thing that I recommend with credit history or payment history is to call if you have any issues. They will help you out. Yes. No, you're okay.
It's not like delinquencies, does that just mean you don't make payment?
Correct. Yeah. Are you reading that? Yeah.
Yeah, on-time payments or delinquencies, so
Yeah,
either you pay on time or pay late, or you don't pay at all.
Delinquent is 30 days or more past due with most creditors. So as long as you're not more than 30 days past due, typically you're not going to have any sort of repercussions from that. You may receive a late payment, but you're probably not going to receive anything more than a late payment. Once you get more than 30 days past due, that's when something like a late payment will most likely hit, and also will start affecting credit. So then 30% of your credit score is made up by capacity. Does anyone have an idea what capacity is, or do you just want me to tell you? Don't cheat by looking at it. No? Okay, so capacity is the availability you have on a credit card. So if you have, I just keep it simple for math in my head while I'm presenting. If you have a $1,000 credit card, along with it affecting 30% of your credit score, you don't want to have more than that 30% capacity on a credit card. You try to stay under that. So if you have a $1,000 credit card, $300. Try to stay at 300. If you have a $10,000 credit card, $3,000. Once you get above that number, and this is also aggregated if you have multiple cards. So let's say your total cards, you have $10,000 in credit cards out there between multiple. You have 3,000, you're okay. So once you get above that, that's where your credit score can fluctuate the most from month to month. And that's where most people see their credit score drop and go up. So let's say you make a big purchase, you went out and bought that big couch that you really wanted, it was $2,500, you have a $3,000 limit. They said 0% interest if you come get our card. And then it's the second credit card you have, you're almost at max on that credit card. Between your two credit cards now, you're probably over that 30%, and then your score is gonna drop. And let's say you pay it off in full in 2 months, your score is gonna go right back up. So people always ask, well, I don't know why my score fluctuates so much. And that's most likely what it is. That's really the major thing that will have an effect on your credit is that capacity that's out there. So if you have someone in your life or yourself that's like, gosh, I don't have a credit score, or I've never been able to get my credit score, or, you know, let's say I've been a good credit, what do you guys think a good credit score is? Let's start there. 850. Bingo, 850 is a perfect credit score. Can't have any better than an 850. So let's say somebody's a 650 credit score. Like, I've been a 650 forever. I have a car loan, I paid it on time. I just don't understand why I can't get a better credit score. I've been paying on it for 2 years. The biggest thing they're missing is capacity. That makes up 30% of your credit, like we said. So if you don't have a credit card out there, you're losing out on 30% of your overall pie chart on your credit. What do you think? You're okay.
Is that right? So if someone chooses not my boyfriend is not. Just take that.
Correct. Yep. Yeah, so there's people out there that choose not to have one for multiple reasons, whatever. Maybe they've had, I'm not saying in his case, maybe they've had some issues in the past, or they've had a family member that's had some credit card issues where they have maxed it out and haven't been able to get ahead. And I would say credit cards do have a bad connotation out there in general, like no, don't use a credit card, don't touch one. But yes, I whenever I help people that are 18, 19 years old, I can get them in a credit card, and as long as they do the correct thing with it, their score will just be in the 700s within 6 months. Because they have, not only are they getting payment history from having a line of credit out there, so they're helping at 35%, but they're also helping 30% because they have capacity out there. So your boyfriend, in instance, he could jump 50 points, 60 points just from opening up a credit card, potentially.
Is there anyone trying to change that? I mean, in a lot of ways, that's probably quite abnormal. People who don't spend more than they have. Is anyone trying to change that credit score
Model.
Not
right now. I think the reason it's so big, and you're saying is that could potentially be a negative thing, like making people get a credit card. Is that kind of what you're thinking?
For sure. I mean,
yeah.
A lot of, yes.
There's people that shouldn't have one, right?
Well, no.
Because
it's not even that. I just, a lot of people, I think, prefer not to borrow money.
So that's.
And so basically, if there's someone who wants to just spend the money they have, what I'm kind of hearing is that they might be penalized for that, which seems backwards to me.
So there's another big myth with credit cards is if you have one, you have to use it.
Right, but it just seems like why not just say, awesome, if you're not going to borrow money, you just use money. Just like believe that.
Or the capacity part of it, are there alternatives to credit cards that people can get to like demonstrate that?
It's really the only thing. You know, there's like home equity line of credits out there, but they don't go under that same capacity. So if you guys have heard like a line of credit that way, really credit cards is the big thing that's out there. And you know, you're bringing up a point that's not something I've really had brought up before. And I see where you're coming with it. You know, Cause it's like, if you don't use it, and you just let it sit there, how's that? It's falsely helping your credit, really, you know?
to go a lot into this, but I don't know what the situation is like right now, but like 20 years ago, I used to live in France, and French people, like they didn't even know what credit cards were, and they just seem to have a better relationship with money in general, and so yeah, I guess it just seems like it's backwards. Like awesome if, I mean, it's great like that we can borrow money and, but it's to punish people who don't want to like even get near that model. I don't know.
So I do have a few things with that. One is, it's people just, they do need that education piece of what it means. You don't have to, even if you, like, I personally use a credit card for everything, and I have a rewards credit card, and I pay it off at the end of every single month. And I get money from my financial institution for using a credit card that I never pay a penny in interest in.
Sure.
So I think some of it is the education piece of, you see the negatives of what has happened to people with credit cards and what they can do to them. And I completely agree with you. You have to make sure that you're in the right mindset. And I know as a country, I don't think we do a great job with that. So it's not necessarily thinking of it as debt, because I never spend more on my credit card than I can pay off in a month.
Sure.
And I think that's a big piece of it, is otherwise you do get yourself into a problem. Another couple nice things with the credit card, someone taught me this years ago, and it was an aha moment for me. When you're using a credit card, you're using that financials money, not your own. When you're using a debit card, you're using your own money that's coming out of your account right away. So why not, especially if you're traveling, purchasing anything online, why not use that financials money? And if there's any sort of fraud and somebody gets a hold of the credit card, they're pulling money out of that financial and drawing your, capacity in your credit card. Whereas if it's your checking account, that money's gone until that fraud case gets taken care of. So they can be very beneficial in multiple ways.
Yeah, and I'm not trying to pick a fight with you. So
I
I totally get that. My personal experience, I had someone suggest that I used to do what you did, and I would pay it off every month. But I was working on budgeting, and someone suggests try using a debit card. Psychologically, seeing the numbers go down, that did have a positive impact on that. Made more sense that I spent something and then my amount went down. I did find that even though in reality, yeah, no one's paying anymore, I think there is that side to it too, that there's that's lined up psychologically. There could be benefits just from
Yes.
that numbers go down. That's just
I-
a personal thing.
I put a disclaimer out there every time, thank you for bringing that up. I do not recommend doing what I do until you're very comfortable with budgeting and very comfortable with where your money is. You have to, that is not the first step. You do not just go out and get a credit card and say, hey, I'm gonna spend money every single month until I max out my card, then I'm sure I'll have enough to pay it off. Yeah, exactly right. Budgeting is starting, if you feel a lot more comfortable watching your checking account balance going down, and you know when it's getting lower, like, okay, I need to slow down this month. Or it just, that mindset of seeing that come out definitely makes sense to me.
Backwards a little bit. So it started out with like, what is a good credit score? And so like 850 is perfect, but if you have 650 and you don't want to touch credit cards, is that still a good credit score? Will that hurt you?
Good question. So we're saying 850 is perfect, 650, where is that in the range? So that's, I threw that number out there because that's a middle of the road number. With a 650, you're not gonna get the best interest rates, and you're not gonna get the crazy high interest rates. So you're gonna get something, you're gonna pay more long-term having something like a 650 credit score. For instance, just to throw numbers out there, I think a new car loan, so our score is a 750 and above is considered exceptional credit with Dupaco. I think you can get a car loan rate of right around 3%. If you're a 650, I'm just throwing this number out there because I haven't looked at that section lately. But my guess is that's probably going to be more in the 5-6% range. So you're probably going to pay double the interest rate having a 650 credit score. Another thing that's really big with credit scores is what we call a trending number. So I think in general, marketing, things like that, your actual number is what you always hear, like, what's your credit score? What's your credit? Like that's, I personally am a lot more concerned about what you have out there for debt, how you're paying that debt, and do you currently have some things to work on, or have you already started to work on them and you're going in the right direction? And when I say that, things like collections. So maybe you had a medical event happen in your life a few years back, and unfortunately, some of those things went to collections. Happened to me personally when I was young. It can happen very, very easily. But you've done the right thing with those and you're starting to pay them off. And we can see that on your credit report. So maybe you had 5 collections, 3 of them are paid off now. Kudos to you, that's awesome that you've got that done. So your credit score is gonna be trending at 650, but it's gonna be going up, which I love to see. And I'm looking beyond that number, beyond that 650. And maybe you've done a good job, you've had great payment history on your car, you've been keeping your credit card down, you're doing all the right things, so your score is gonna be going up. Then you have a 650 where they left their apartment and they left their MediaCom box there because they don't care, and they have a $200 collection from that, and they've gone to Verizon and AT&T and T-Mobile, and they've just broken contracts at all 3 of those, and they have a $1,000 collection at all 3. And maybe they missed a payment recently on their credit card. They were doing great. They were 750, but now they've dropped down to a 650. And that person scares me a lot more. They might have the same number credit score, but they're gonna be probably a 600 sooner than later, whereas the other person could be a 700. And they're just meeting at that number in the middle. So there's a lot more to it than just the number itself. And that's what we look at. Like I'm speaking on behalf of Dupaco, we really dig into your whole situation. So how are you handling your checking account? What's your life story? What has happened to you recently? All of those things come into play too. So, let me see if we answered the second part of that question too, because I think it was 2-part. So, what are they and how can they change mine? So I think we kind of talked a little bit about both those. There is 3 more things that do affect your credit down there. There's 2 that are 15%, or 1 that's 15%, 2 that are 10%. Am I mixing that up? When there's
2 10%.
2 10. Yes, thank you. So the 15 is length of credit history, correct? Is that what it shows on there? Yeah. So that length of credit history is just something that's going to take time. That's why I try to get young borrowers into credit as young as possible. And then the other 2 there are I've drawn a blank on the other 2. Type of credit. Yes, so type of credit is having a mixed revolving and installment loans, so both. And then credit accumulation is just that you don't want to go out and get a bunch of new debt all at once. So you don't want to go out and buy a car, house, credit cards, all within a short period of time. That'll start to dip your score as well, because it's showing as maybe you're kind of a shaky borrower at a time. Yes.
What's the number of years needed to max out like the credit rating?
I don't know if there's a formula behind that. I don't know that there's an answer to that. There's a lot of things. So big picture, there's a ton of different scoring models. And there's 3 credit bureaus. There's TransUnion, Experian, and Equifax, and they all report things differently. So there's a ton of formulas behind how the actual credit score works. And I don't know that there's ever been a number that's come out that said, if you have 30 years of credit history, that's going to help you out more. I don't think it stops at any point in time. So I don't have an exact answer for you that, I'm sorry.
You give everyone the URL for the site people should go to get their free credit score from the government.
Oh yeah, annualcreditreport.com. You can go on to annualcreditreport.com every year, and you can pull your Equifax or TransUnion and your Experian for free once a year from that site. So, and those are what's considered a hard pull, so those do affect your credit score. There are so many ways to get your credit report for free nowadays, though. Most credit cards have a free credit reporting service attached to them. Dupaco, if you're a member, you get free. Most financials have it as well.
Are you sure the free annual credit that will actually run your credit rating? If you go to that site, because I specifically said you don't.
I just said it should be a hard pull for
But
either
it's an
credit.
exception. Like the site will actually say it.
Does it?
Yeah.
Okay.
Double check before you do this.
Yeah, maybe since they don't, I think it's an extra $1 to get your score. And that might, because you have to pay to get your actual credit score. So they will give you all of they'll give you your credit report, but you have to pay to get your number. That's the part where so just when you are on there, that's one thing to look at as well. So all of the credit monitoring services, like our Bright Track system, all of those, that's not your actual credit score. That's just a system that like our Bright Track has developed to give you a credit score. The only time you actually get that number is if you get a hard pull to get like a loan out. That's going to be an actual credit report. So there's soft pulls and hard pulls. That's a whole separate discussion. We could go down a whole separate window of that. But yeah, if you're checking annual credit report, it'll give you your report, but it won't give you your actual score on there. So. No, you're okay.
I just had like a little bit of a brain, yeah, so I guess we're talking about credit score. It's not like it's a personal finance score. So like in the case of somebody, if someone isn't interested in borrowing money full stop or at all, then they don't really have to care about a credit score. I mean, I guess this is a score that people are looking at when you want to borrow money, is that right?
So, and I think that comes up in a later question, and I love so you've had some really great questions. The reason you do want to keep a credit score is it does affect multiple other spots of your life outside of borrowing. So, car insurance, homeowners insurance, renters insurance, all of those check to see what kind of borrower you are. There's rent, if you go to rent, like background checks. So if you're going to rent, a lot of places will check your credit score. Also for, unfortunately, which I don't necessarily agree with, job interviews, they can go and do a background check on you, include a credit score on that as well. So there's a lot of different pieces that it kind of involve just outside of going and getting a car, a mortgage, a credit card.
So in a way, it is personal finance rather than personal finance score, even though.
Yeah, it'll certainly affect you through life. Unless unless you don't need those other things or you don't mind spending a little bit more. But yeah, there's other factors that it'll certainly affect you. So next question here, how do I determine if a loan consolidation company is reputable or a scam? So with loan consolidation, my wife went to Clark for 6 years. So you can imagine how much debt we have from that. So we get debt consolidation letters all the time for her student loans. We get them in the mail like every week, actually, every single week.
Wow.
So that comes into that question, well, how do you know if it's a reputable company? You're getting an email from them. For me, research, I mean, that's the simplest way. There's so many different ways to research a company anymore to see if they're legitimate or not. You can always come into your local financial as well if you have your Dupacos, whatever other financial you're at, bring in the letter or bring in the email. I always recommend doing that too before you have anything that they can tell you, or ask your financial, hey, I have this, debt, what can I do with it? And, we will certainly sit down with you, review your credit report and see what can be done. So. She's bringing you, did you have something you're thinking? Oh, okay. So yeah, if a company is reputable or not, I would always research them, talk to your local financial, see if they think it's a reputable company or potentially a scam. So another question kind of revolving around credit. With the housing market so challenging right now, do you think it's financially more responsible to wait for house costs to come down or to purchase? And a lot of these questions are really kind of up to what your specific needs are in life and where you're at. And the problem with right now is interest rates are so low, but obviously, I don't know if any of you guys have looked at the housing market in the last 6 months or a year, but it's absolutely insane to try to purchase a house. I would say most houses in Dubuque are 15-20% higher than they were 2 years ago, which is a huge uptick on what you're paying. Granted, right now, I think our 30-year mortgage loan rate's between 2.5% and 3%. So, are you ever going to see that again either? So it just depends on where you're at. Do you really need to get into a house right now? Then that's what you need to do. You just need to figure out, look at other avenues too. You don't have to go just on the realtor site. You can go, there's a lot of for sale by owners right now. You can try going that route, see if you can get maybe a better deal on something. Reach out to people that you might know are selling their house soon, see if you can get something a better deal that way. So I'd say there's other ways to kind of go about it. I don't know if financially responsible to wait for housing costs to come down. I could see that as financially responsible if you have a great living situation right now and you don't need to move in the next little bit here, then maybe sure it could be financially responsible to do that. But like I said, it's really up to each individual situation to see what you need to do. Last question here, what is a good interest rate for a loan? And what is the difference between fixed and variable interest rates? So what is a good interest rate for a loan? So that's a question. It depends on what type of loan you're getting and term of the loan, things like that. There's so many different variables involved in what a good interest rate is. My thought process always is to talk to multiple financials before you make a decision. Me even coming from financial saying that, especially if you're going to purchase a vehicle. I highly recommend when you go to purchase a vehicle is to try to walk away that day. Do not do everything in one day. I always say to walk into the dealership, tell them what you're looking for, get what's called a purchase agreement. We'll tell you what they're gonna, what the vehicle price is, all of the information. It's a little bit different in today's environment because cars are going like crazy right now. But then you can go and research. So that's the biggest piece for me. When you're looking for a good rate, I would talk to multiple people at once to see who can get you the best interest rate on a vehicle. So it just depends on where your credit score is, if you can have kind of an idea.
I think,
Well, your credit.
If you walk away, is the idea that you might find something much better, or are they gonna be like, come back to a better offer if you walk away? What's the why behind walking away?
My why behind walking away, multiple factors. That dealership wants that car sold that day, which is fantastic. If you're in need, you gotta do it, sure. But they're gonna do everything they can to get you in that car, and it might not be the best thing for you to do at that time. Cars are shiny, they're exciting, it's something new and enjoyable, so you're emotional buying, which is a scary place to be. That's what shopping does for you too. You look at a window, you see something you really want, you go in and buy it because it's an emotional purchase. So you want to get away from that emotional purchase and getting more into a logical purchase where, yes, this is what I need. So especially with online nowadays and researching, you can go onto AutoTrader, Card.com, you can look at the same car at 10 different places and you can review it all on the one screen, which is absolutely fantastic, So I say do that. So you can go test drive a few and that dealership's gonna try to pull you in to buy that one, but you're like, no, I'm just test driving today. You can always do that. So highly recommend doing that than just going and purchasing right away.
So what I'm hearing is that it's more about my behavior than like the behavior, like some like tricks that car salespeople do, whatever, but it's.
I put a disclaimer out there that I truly think and hope every dealership is doing and having your best interest at heart. You hope they are.
Yeah.
If they are or not, I don't want to get into that, but you hope that they are. And that's though also where it comes into that intelligent buying is maybe getting an opinion from someone who is in the car industry or has a little bit more knowledge before you make that final decision. And do research on cars too. I feel like I've done it before. You just go and buy something because you're like, I need this. It's what I want. It's sitting on the lot today. And then you're stuck in a car that you're like, gosh, this doesn't have good reviews. Why did I just buy this? So, that's another important piece. Make sure you do all your research before you go and look. The internet's kind of amazing if you guys haven't used it recently. It has everything you need. So, highly recommend doing that too. So those are kind of our questions on credit. I think we had a pretty good discussion there. Trying to find what clock's right in front of me. Did we have an hour for this or is it? Okay, yeah, we can keep going then. If you guys want to keep going, we can go through a few more questions here if you guys want to. We'll try to get through some a little bit quicker here. There's not a ton left. There's a few investment questions in here. How do you get started with investing? What's the difference between Roth and traditional IRA? How do I know what's best for me? I'm going to answer those kind of quickly. I will preface this with saying I'm not a financial advisor. It's kind of like a lawyer thing. I don't give, you can't give lawyer advice if you're not a lawyer, right? You can't give legal advice is the correct term to say there. I can't give financial advice with your investments because I'm not licensed in it. So how do you get started with investing? Once again, research. I would research, go online, see what makes sense for you. Like I said, I can speak on behalf of Dupaco. We have a financial advisor group, so they will sit down with you, no obligation. If you just have some general questions and are thinking about starting in the investment world, you can talk to them and see what they think you should do. And then I can answer the difference between a Roth and a traditional IRA. So a traditional IRA is when you are putting money into your IRA pre-tax. So when you're getting paid, you're putting that money in there before you have your taxes come out. What that means is when you go into retirement, that money is going to be taxed at whatever tax rate you're at that point in time. So that's a traditional IRA. Roth IRA is going to be your tax on it up front, so your tax rate, whatever that is today, that Roth money is going to be taxed today, and then you don't have to worry about that into retirement paying taxes on that money. Roth IRA, both IRAs are honestly, they're a little bit newer. The Roth IRA is a lot newer terminology that's come up, and I would say the last 10, 15 years. Traditional was always just kind of the only way that you did things. So it depends on where you're at in life. Once again, I would talk to a financial advisor to see what they think would be the best way for you to go. And when should you start an IRA? I think it starts right when you start working. See if your employer offers it, and then just kind of go from there. If you are self-employed, something along those lines, I'd start as early as you can to kind of get yourself some retirement set up. So you can look at charts out there and just see the difference in a graph between starting at 20, 30, 40 for retirement and putting the same amount of money in at each age. I don't know if anyone, have you done that before?
Well, I just heard the logic factor with that.
I have not. I'll have to write that down.
Yeah, like David Bob. Basically, he shows that if you put 12.5% of your income, someone, I think from 20 to 28, you put 12.5% of your income in and then never contribute again, versus someone who puts, I can't remember, but if you start when you're 40, the person who contributed from age 20 to 28 is by the time you're 65 or 70, I don't know that age.
Yeah.
Anyway, but he has some good, it's a really short book and he has a lot of good graphs that are kind of like, oh.
Yeah, the compounding interest is what it's all about. If you start that at a young age, it just makes such a big difference. And like we mentioned earlier, if your employer offers any sort of retirement assistance match, so many young people don't do that, and you're throwing away money if you don't. So highly recommend doing that as well.
Said the interest on the Roth IRA is taxable on front end.
Traditional IRAs are taxed. You pay taxes. Now let me think about this now that you asked that.
Never walk.
Yeah, so traditional IRAs, you are, you're paying the taxes up at the end, on the back end. So when you take the money out, Roth IRA, you're paying them up front. Sorry, my brain was scrambled there for a
My
second.
question is, if you're paying the taxes up front, then the interest earned and compounded when taxes on that.
On any other, so the income during that, then you would get taxed on at the end on any additional earnings.
No,
On Roth?
you don't.
You don't?
No.
Oh, okay.
You pay taxes and then from your money that's already been taxed, you're putting that to account and then you get it all. When you can withdraw, it should be between 60 and 65.
Yeah, I had my brain scrambled there. I'm so sorry. Yeah. Yeah, so the Roth IRA, yes, the Roth IRA, you're not paying any taxes on that when you take the funds out at any point in time, once you've reached the correct age for it, which could change again at any point in time, but yeah, that's why I say correct age.
So the percentage earned is not taxed.
So the income that, like the money that you earn in the Roth IRA is not taxed. Yeah, it's It depends, I mean, I think too, the big thing is the tax brackets that you're gonna be in between from when you're in now and when you're retiring. Some people like the traditional IRA because it can potentially lower your tax bracket if you max it out now. So that's why some people do it up front, because that's taxable income up front. So if that's not considered earned income. So let's say you throw, I don't know what the max is for a traditional IRA. Anyways, if you put that,
Roth is maybe 6,000.
and I think, yeah, 65, or it's 1,000 more for catch up. So that could potentially drop you a tax bracket as well. So that's why some people do traditional IRAs. Yeah, it just depends. Not my strongest subject, I can tell you that. I can explain what the basics are, but not too much more than that. Let's see what else we have up here. I think that's about everything for our questions. I did have two that were didn't really fit into a category. First one, is there any reason for people to have paper checks? The only time I would get a paper check is if your options are a paper check or a pay card. So that would be, a pay card would be, have you guys heard of Chime before? So Chime is basically, they call them payroll cards. So Chime's a little bit better now, it's more of a banking system, but some companies offer a payroll card where you get your money, it's like a debit card, but there's no actual account set up to it. It's just literally your paychecks go in there and you can use it like a debit card, paycheck to paycheck. But there's no way to save with it. There's no savings account attached to it, nothing like that. So I try to get people off of those as much as possible. So if your employer offers that or a paper check, I'd highly recommend just continuing to get a paper check and using a traditional financial so you have a way to save.
I actually put that question to myself. I recently had a teenager come and do some pet sitting for me on vacation. And we were chat, which means that. And then I realized that maybe people with checking accounts don't necessarily have paper checks. So is that something that you're having?
I think so many people transact virtually now with money. I Venmo, Cash App. I think that checks, unfortunately, and there are still, I think that's a prime example of when you still would write a check, or somebody cuts your grass, or why would you not just write them a check simply? And then they should just be able to cash that at the financial, unless once again they have a financial, they use something like a pay card where they don't have anywhere, and then they might have to go to, see if a cash advance place would take it or not. So that'd be the only time.
Yeah, I love this question because, I recently moved here. I'm originally from Iowa, but I used to live in the UK, and I never used checks in the UK. And so when I got here, we just did everything by bank transfer, and my landlord, I asked for his bank details, and that seemed like a really invasive question to him. So I kind of understood, I need to use checks. And then when I receive checks, which I do, I have to send Bank of America, so I have to send them by post, and it comes in 4 days. My checks have reasserted themselves into my world, but I didn't use them for 20 years, so I don't know.
If you don't have somewhere local to put a check, they can be very difficult to find a place for. I know, you can snap, I don't know if you're a financial officer, but you can snap a picture of it too and deposit.
So I still have a British. I still have a British phone, and so I don't have a Bank of America app. So there's all these interesting little
Quirks.
Banking across borders is not easy. But so.
I can imagine. So there's definitely times to still have paper checks. I read that question a different way than what you were asking. But I was thinking of more payroll, but what you're saying, I definitely think everyone should still hold on to a checkbook and have one for those incidents where things come up, and there's definitely still people who will take one for different things. So, or we rely on our debit cards so much. What if you're at a store and your debit card's not working? I've seen that happen. How are you gonna pay for what you need? If you have your checkbook as a backup, you at least can still, a lot of large companies will still take that, like Walmart or Target, so I think it's good to keep paper checks personally. And then the other question that really was kind of didn't fit is pet insurance worthwhile? For me, that kind of goes back to what we talked about earlier with like having those savings goals set up and kind of save ahead for events like that. So let's say you do have pet insurance and it's, let's say, I don't know how much it would be, $35, $50 a month for pet insurance. Why not plug that away in a savings account every single month? Hopefully your pet is healthy enough, or maybe you might have one or two large events come up every once in a while where you need to take them in. Hopefully it's not an emergency visit every month, but so if you do have that happen, 6 months of saving $50 a month, you have $300, which I think with our dog, I think that's kind of an emergency visit would be around that $300 mark. So now you can pay for it up front instead of, you're still gonna have a copay most likely if you have pet insurance out there. So hopefully you get to that point of paying for those things ahead of time, unless you do have a really unhealthy pet that maybe does need it. But I think just trying to save for yourself.
Is pet insurance, pet health insurance, is that what it is?
Yes, pet, good question, pet health insurance, yeah.
I've never had it, so very good.
Yeah, and I think, I'm sure there's reasons to have it, but personally, I would say to try to save in advance would be your best bet, so. Anything else? I love all the good questions. You guys tricked me on one a little bit there myself, so I apologize. Awesome, well, thank you, everybody. Maybe this is something we can do again at some point, maybe have a more specific item that we talk about that's certainly possible instead of just kind of general Q&A. So thanks, everybody.
Thank you.